All right, good evening, guys. Thanks for your patience. Nightly strategy podcast for September 7th, 2022. Start with the market 150. The bottoming price action is continuing here around the key price level of 390. We said it was important to hold this level at the 30-day low in order to keep it out of this congestion area. And this is the real support and resistance area that prevents it from breaking below 370. So if it can hold here at 390 without getting to 380, which is where that test really begins, then this could be longer term a COTA 2 kind of a setup and would support that kind of a move back to 430. So this is really a crucial week for us here. Can it hold 390? So far, tentatively, so good. Zooming into the market 30-day look back, we're noticing the PSAR flip right here, such a reliable indicator for us. Trust that. Here's the breakdown. There's the weakness to the downside. And now we've had 5 days in a row, 1, 2, 3, 4, 5, where it really hasn't made a new low. It's kind of this sideways chop. You notice that the 5-day range is small compared to the 10-day range. So this is a range compression happening here, which supports the idea of holding support. Strong close today off this low at 390, made a 2.5% move off that low of the day where it opened. And this was all directional and had a very strong close. So this is all signal today, very little noise. Now, it still has to get through the spine of the dragon and the far side of the dragon at 405. PSAR tomorrow will be about 407. And that's the first time we can begin to start thinking seriously to the upside. But today was failure to fail. That's a good thing. The MACD histogram had a bit of an uptick from here. So this is technically a WMB3 pattern setup, right? So let's take a look at why. So we've had oversold on percent R. Check. We've come over here to a MACD histogram uptick. Check. So technically today, on a swing basis, we could have played the breakout above that candle as an entry with a stop just below that 2-bar low for a risk box that looks something like that. And then we'd be that much in the good right now. Now, a 1, 2, 3 entry would treat this low as the 1. That has a higher low, so that's a 2. So tomorrow, if it opens anywhere north of that 2-bar low and then takes out today's high, you would have, that would make this a 3, and the mechanical entry would be at about 398, let's call it. So that's 2 votes of confidence to the upside. The technical entry would be, like on an SSC or a COTA 2, would be to take out the PSAR dot tomorrow at about 407. But an intraday trader might want to accelerate that and get that earlier entry on an intraday position and then reinforce it if that gets taken out tomorrow. And that could happen tomorrow if we get another day just like today. So that's looking promising. Drill down to the 30-minute chart. And now what we're looking at is the 5-day look back, and you can see that range compression here in that 5-day range. as compared to the 10-day range, which is here. So it's held support once, twice, three times. The PSAR flip today, which we noticed yesterday, happened at about 392. And so on the 30-minute chart, you're justified in taking that as an SSC with a risk box like that. And you'll notice that all you had was signal. And if you make that trade on the 30-minute chart, you're holding 3R going into the close, and you could decide to hold that or not. I would hold 20% of that overnight on that basis. But as you can see, the 30-minute chart out to the 2-hour chart, that's like an intermediate time frame. When you're trading the 10s, the 5s, the 3s, or the 1s, that is clearly day trading. That's all about day trading. And if you're trading daily charts and weekly charts, you are clearly swing trading. And if you're trading monthly charts or weekly charts, you are position trading in our nomenclature here, right? And so this little time frame in here, the 2 hours to the 30 minutes, is a hybrid between pure day trading and pure swing trading. This is a way to do swing trading one day at a time. Because this is either very slow day trading, because you're trading on a 30-minute bar instead of, say, a 3-minute bar, or it's fast swing trading because you're trading on a 2-hour or 30-minute instead of the slow daily. Like there's 17 30-minute bars inside the normal daily trade. Or 15 bars. So you get a lot of information and lots of opportunities to study patterns. So that is fast swing trading or very slow day trading, and that's why we call it hybrid. That 2-hour to 30-minute gives us a nice transition state where we can actually do both of those, and we can translate our day trades into swing trades. So looking at the 30-minute chart, you got some nice strong support levels in here. And you start getting resistance here. I'm going to put that in purple. Resistance at the peak of the dragon, at the key price level of 400, and then at the peak of the RL10, which is going to be about 403. So tomorrow, if this breaks out north of this price here, so it closed here at 397.78, if it breaks above the high of the day, there's reasons to believe that this could be resistance. Well, what would those reasons be? Oh, the fact that it fell earlier this week here, and from here it could not get any higher. It fell. So this looks like a resistance level around that key price level of 400. But if it breaks north of that 403, then this should be free and clear, and then the next support or the next resistance level is up here around 406, and then it's nice and clear all the way up basically to 418. You might call this little RL10 wiggle, say 410. I would sort of treat that as a intermediate price. I wouldn't be offended by that. So you can see there's another, that size of the move all the way up to about 410 is the size of this move. So all it has to do tomorrow is what it did today, but to do that, it has to get through this significant resistance level. So we'll keep an eye on that. So if you're still holding a position from anywhere inside here, and tomorrow this thing starts to continue to move, I'd add a position. I'd put the day trade position back on right away. And then if it failed here, I would invoke the 2R battle drill and preserve the gains. I would probably keep the swing position on because I have that anchored to 390. So that's my risk box for the swing. So I might decide to keep half of that and give it that much room so if it wiggles, then I can re-enter the intraday right there. So that's a strategy for hybrid trading tomorrow on the basis of today's um, decisive move up on real weakness in oil. So there can be, we're going to see in the sector report a lot of things are working today. So there's reasons to believe that this 390 just might be a support level. So that's how we craft that little value price ladder to the upside. It's got to break above the daily high, above the hump of the dragon, above the hump of the RL10, above this RL10, probably that one. And then I would say back up here to the peak of the dragon in the RL10 around 417. So that's the value price ladder on the way up. To the downside, you need to have a stop not later than 395, which is the skin of the dragon, or the PSAR dot, or the belly of the dragon, or the belly of the RL10, or the 10-day, 30-day low. So that's the value chain on the downside. To me, the signal to execute short is about 394. I would be short here like a fat rat. Okay, that to me is the line in the sand. Let me know in chat if that was helpful. All right, let's take a look at the sectors. Start with the big indexes first. Oops. Excuse me. So the S&P, our baseline was up 1.8%. Hasn't gotten above the key price level of 400, but that's a good start. It's still showing a 3-to-1 reward to risk ratio on the mechanical trade frame back to the 10-day high using today's range risk. So that's a very good swing trade still. If you're an intraday trader with the S&P, the R10 is 85 cents. And the range stat is $8.50 for reference. All right, what was better than the S&P today? Well, tech was up 2%. The Russell was up 2.18%. Tesla, the most important stock in the world, was up 3.38. What was worse? Treasuries were worse at 1.58, and they're almost back to that key resistance level of 110, which used to be key support until that broke. So maybe this is the recovery trade in treasuries. Diamonds were up 1.32. That's pretty respectable for the old fat conventional Dow. Emerging markets lagged, but they were up 0.9. So when the worst performer is at plus 0.9, that tells you what kind of day it was today. Broad-based buying after some panic selling. Here's the cut line between, true gains and true losses. So the speculative indexes in the U.S. were up. The defensive index was down, and the S&P just kind of marking time right in the middle. And the rest of the world, the emerging markets, was lagging. So that's an indication that this is U.S.-centric. All right, let's look at what was worse today. So we'll be mindful if that was just a one-day pop, what might lead the way down. Baseline S&P 1.8. Bitcoin and tech 1.6. Ethereum 1.47. Uranium 1.28. Mexico, Brazil, lumber, 0.91. The Aussie dollar, 0.54. Now getting into true genuine negative territory. Marijuana, 0.4. Agriculture, energy, 0.64 and minus 1.16. Oil exploration, blended commodities, the VIX, and oil. So you can see this is the entire energy complex, was about the only thing that lost today. Now, I will say, now for individual companies, Devon Energy, Alcoa, and Cliff. So that was, 2 out of our 3 metals were suffering. Intel underperformed. Apple underperformed. Yeah, they were up 1%, but they underperformed both the S&P and the tech sector. So that's not a good sign for them. All right, let's look to the upside. Individual sectors. Let's try it that way. So that's not what I want. Yeah. Staples, the other lumber, real estate, and finance, 0.9 or 1.98. That's all good. Commercial real estate, the FANGs, materials, discretionary, lithium, ARC Genomics, or I'm sorry, ARC Innovation, I should say, precious metals, biotech, clean energy, ARC Genomics. So all the disruptors were good today. Individual companies that were good, starting at the top, Coinbase and U.S. Steel. So U.S. Steel was the big story for me today because unlike the other 2 metals, which lost money today, where were they? That was Cliff and Alcoa were both well down. U.S. Steel was exceptional. It was better than its sector and better than its peer group. So that was people hitting the buy signal hard on U.S. Steel. So that is my number 1 priority for tomorrow. In the financial disruptors, now notice you have Coinbase at 8.7, Squarespace at 3.8, PayPal 3.6, Robinhood at 2.93. So the entire financial disruptors were all working, all good. So look for continuity again tomorrow. They're going to be large tomorrow, whether it's up or down. But they're at a very strong up signal today. In addition, Microsoft and Nvidia. Now they were better than the S&P, but unfortunately they underperformed the Qs. So that's not a sign of strength. The only thing going for them is that they were both better than Apple and Intel. So all other things being equal, they're better than their peer group, but they're not as good as their sector. All right. Let's shift to the daily report. Okay, the sniper trade of the day for me was U.S. Steel. This was just massive goodness right out the gate. All right, so This was yesterday's close, and here was the gap down opening, and that's the OR3, and that's about the size of the R10. So it breaks out above the opening range 3. It has moved a risk box off the bottom. So why not? So I buy it here. It breaks through yesterday's little resistance right there. And then after this little consolidation, I thought seriously about a second position here, because by that time I've got almost 3R in hand. Span of control, I was content with 1. And I'm following it with the PSAR. But by this time, it's peaked, and it's had 3 bars where it could not make a higher high, and then started rolling over. And now, noticing that the RL10 has peaked and has crossed the baby dragon, and now I have a 1, 2, 3 exit. And if I take the standard risk box and just hang it from the top, I'm giving back 1R. So if that's 1 unit of risk, 1, 2, 3 units of reward, so that's +3 against a maximum favorable excursion of +4. So that's felt proper. So now I'm noticing I got 3 higher lows, and then after a nice strong move up, that makes this a COTA 2 entry. When it takes out the PSAR, I'm entering. There's my standard risk box. There's the standard trade. It comes back. I take it at the PSAR for another +1. So now we're at +4 for the day. It goes sideways. It does not fail. It just holds. And then the PSAR comes down. And then it breaks out. So I buy it here with my standard risk box on. Just leave it alone. Standard exit, +1, so that's about +5 on U.S. Steel. Very orderly. And this was a pretty strong close. Like, that was not, there was no panic selling to lock in the gains of this move. So that tells me that they were content and would not be budged. So at the first sign of continuing strength tomorrow, I'm back in U.S. Steel with the intraday size. Check or hold. All right, let's get to dashboard number 1. Continued to be in bearish normal. The 2-day recovery was strong enough to pull the 10 and the 30 out of the red where they were yesterday. It made the 90 pop out from below neutral to above neutral, above the median. That's good. So that's a sign of some strength returning slowly, carefully. The risk index is still warning. Hey, just recognize we're still in that critical state, and so you can get a strong up or a strong move down, and we framed that out already on the daily report, on the market health check. The min pains, Walmart, McDonald's, Johnson & Johnson, JP Morgan. The max pains, Alcoa, 3M. You're going to see a nice trade from my brother on that one. Intel, Caterpillar, and Boeing all suffering. So at the first sign of weakness tomorrow, if I see market weakness and these weaker than the market, those are natural, easy targets intraday. That's just a shortcut for simple trading on the basis of leadership and laggardship. Dow Tactical, still plenty of auto framers were good today. The only symbol in our Dow stack that broke was Verizon, and it was flat for the day. That made it exceptionally poor performer. Winners today, Tesla, 3M. That was a Godzilla that we've been pounding. Today was a reversal in that to the upside. When you have strength in Tesla and Home Depot, they are key components of XOY, two of the three biggest. So that one should have done well today. Walmart had another strong day. It's really outperforming. All those highlights in green, meaning that it means it's been outperforming this peer group in the 1 day, 10 day, 1 month, and 3 month time frames. It's been that strong. Whereas Intel, all in the red, is exceptionally weak performance compared to this same peer group. Alcoa, exceptionally weak performance in the peer group, except for the 12-month period. So that's kind of just a down and dirty way to find out where the strength is. We'd call that a field expedient relative strength. The ETFs, also most everything on a auto framer frame. Oil, big down on every time frame. Therefore, not surprising that XOP suffered a little bit as well. Some really nice reward to risk ratios in the globals. But I would prefer to look at the U.S. on the upside. I think there's more, it's easier to believe in the upside. After a large sell-off and then a 1 day of recovery, it's not unusual to see a lot of things on the auto framer that have better than 2-to-1 reward to risk. Again, I always start at the top of this list and work my way down, with the reasoning being that the highest reward to risk ratios mean they have fallen the most from their 10-day high. And then when you take today's range and use that as the range risk and say I've got 1, 2, 3, 4, that frame would give me a 4-to-1 reward to risk ratio on a simple return to the 10-day high. So everything that I'm highlighting here that's above tech, these are all even better than that. So Procter is almost 6-to-1. 3M remains 5.3-to-1. So that's how you read that chart. It was a large, slightly larger than normal move today in the S&P, so it's not surprising that all of these other components had relatively large range days today. So only Procter is on a better than 2-to-1 squeeze. Tesla's nice move did not feature an explosive upward move. So that's a nice grinding upward move that outperformed. And that's what you want to see in leaders coming out of the bear, is that quiet, grinding, consistent daily outperformance. That's what we're seeing now in Tesla. Shifts into the sniper headquarters. A much smaller set of Godzillas, because a lot of things came out of their Godzilla and moved up far enough today that they're no longer in that Godzilla setup zone. They're all okay for the continuity trades like 3M, but they are no longer technically Godzilla setups. VIX and Bitcoin in the tactical symbol set. Hewlett-Packard is the one that's of interest to me because it has a volatile 5-day move and a very quiet 1-day move. So that little rebound may be stalling. So that will bear some watching. In the fireworks and popcorn, we're starting to see some large moves coming out of that 5-day quiet consolidations. So I would investigate all of these large 1-day, exceptionally large moves. In particular, these 4 that have a exceptionally quiet 5-day move. So these are things that are typically had strong up moves, abnormally quiet 5 days, and then today was a big move. Like that could be the breakout from that consolidation area. And then we would look at the size of this move and project maybe it could do that. So I'd be interested in seeing how much higher out of the compression zone indicated by this quiet did it go. Is there still more room to the upside? Where's the next support and resistance of the 10-day high, for example? The quiets, kind of the same deal. CTVA stands out to me. This is one of the most exceptionally quiet symbols in the S&P 500, but it's had a very strong one-day move. Among the most volatile, I'm looking for extremely volatile 5-day and then abnormally quiet. But I'm also looking for things that are relatively large volatility on the 5-day and big moves today. So PEG and 3M are both really. PEG is interesting because it had an almost 5 sigma move. And BACS, same thing. So I'm looking for the anomalies. Sniper auto framer, the usual stuff. Tactical symbol set. This is the complete set with the reference data for sniper trading, sorted by the z-score of the 5-day volatility descending from highest high. Only treasuries out of our whole symbol stack are abnormally large on the 5-day. That sell-off to 107 was a trigger. Wheat and precious and Mexico of interest because they have started to make the big moves. U.S. steel, I love that one. Brazil, nice move today as well. So I'm looking for the movers. This is how you find the movers. Now, XLB is interesting because it had a large range day. U.S. steel was up large, but Cliff and Alcoa were down large. So, going to be big moves tomorrow in that one. Just don't know which direction, obviously. Handful of key leaders today. I like McDonald's here because he's well above average on every time frame and was pretty good on the 2-day. That's nothing to sneeze at. PayPal's pretty good on the shorter term momentum and performance. Only the 270-day look back is showing you just how far from grace PayPal has fallen. Over here on the ETFs, utilities just keep saying, "Look at me." Otherwise, Mexico is of interest. Real estate, this may be the start of that turnaround. It's been underperforming in my book. Clear weaknesses in the energy sector and the energy components over here. ExxonMobil, Devon, Chevron, all in the deep red today. And that's everything from the daily I want to cover. We'll go right to the traders. Tim staying with it, slow and steady. It's going to bring home 4.6 today. Quick loss, cut it quick, and then quick re-entry. Got paid twice. Good scratch. It Was in meetings and lunch, and for a change, that didn't matter that much. Gets back on board as it's starting to collapse with a COTA 2 short. I like how he got paid here, and then he waited to see the real collapse, and then smashed this one for goodness. This was, he noted, a collapsing dragon on the hourly chart, and I would say, well then, add your second position here. You're already below the VWAP, and it's failing, and this failure right here has negated all this positive price action. That thing is just in the beginnings of longer term collapse. So that's the second position. And that could have been a 6-hour day. Constantine, doing some very good work today. Oh, come on. Really? You're going to make me reopen this, aren't you? Okay. I'll play your silly game. All right, so Tim, some really nice work here. He had other things on his mind, and ordinarily he might have picked up this Z3 pinch breakout and made about 10R on that one. He starts trading here. He notices the lower highs, the lower lows, and then gets this one short here. Standard risk box. Recovers and gets paid right here for a quick 2R in the dollar yen 5-minute chart. Beauty. In the gold spot dollar, he notices from the German open session a key support and resistance level. COTA 2s. So when he starts trading here, he sees the COTA 2 in reversal, bang, on it. It comes up and starts to roll over exactly where it did before. So he banks his 3.3 and says, thank you very much. He now notices that this is a support level that supported that move. And now he gets an SSC, PSAR flip, bang, entry, 4R. So that's 7.3 plus 2 from the other one. That's about a 10R day. And then in the DAX, I think, yeah. So, and then in the DAX, he gets a real nice COTA 2 entry again. Support, higher support, breakout above the PSAR flip. Starts to fail where it failed last time on that leg down. So you're not going to stick around. He just gets paid for another 3. So that's about a 12-hour day for Constantine. Pretty nice work. My brother, so we framed out 3M as the Godzilla yesterday. And he gets his R10. factor in there. Has the K2 breakout, so it works. It gets 2R in hand, doesn't fail, and continues up. So he's already more than 2R in hand, so he can use one of these to fund that next position. It immediately works in his favor. He gets 2R in that one. Third position. It starts to roll over and crosses the baby dragon. He's out. So 4.8, 2.1, and 0.6. 6.9, 7.5 on that sequence with standard work and a 2R battle drill. Now, visual box trading. He's got this higher low, breaks out again. He adds a second position because why not? It just is breaking, and he's got 7.5 to play with. So he gets a second position on. Gets a third position on when that doesn't fail. I'd rather see you exit here and then re-enter here, but I appreciate that. Now he was looking for the 2R battle drill to add another one here, but instead it rolls over, breaks the PSAR flip. So micro loss paid for by this one, and he gets 0.9, so he gets 7.5 plus 0.9 and 0.1 for the kitty, so 8.3 for the day. On the trade that we framed yesterday. Luke, showing that he's human today. Let's not have too much of that. PSAR flip. It rolls up. To me, if I'm that far in the green on one bar, which is like almost 1R in hand, I don't want to let that go 1.5 against me. I'd like to see you scratch that there and just say no trade. I love the short. That's a reasonable exit. You kept most of it for 1.3. I like the Kata 2 here. I'm not sure where you got out of that one though. If you let that come all the way back to here and then get out, I'm wondering what's going on. I'm not sure I understand that one. I think if you did this, if you got long here and then it went up and then rolled over and got out right there, I'd be happy. If you let this one go long, sell off that far, then come up here and then pull back and exit, I'm going to say have head examined. You need to get out of that right away. When that doesn't work right away, you cut it right away. This one looks like the PSAR flip reversal long, and that failed, and then he immediately got short. Now, if you're, again, that far in the green or in the money and it comes back to here, don't let that go 0.8 against you. That's another 1.5 adverse action that you ate. I don't like that one so much. And this one, look at, if that's 1R and we're plus 1 and we let that go negative to point minus, that's another 1.4. So that's like 4.5 of making sawdust today. So I'm not happy with that. Great stop and reverse. And I'm this far. And I let it come all the way to here. Now, I think this is probably exercising, trusting the PSAR. If that's the logic, I can live with it. But I also want to be mindful of being +2 on a negative day, and I've already given back 4. I might want to just say, enough of the experiment. Let me get some real money. So, make a decision on how you want to manage that and feel professional about it. I like the entry. I think it's a little late, but I don't mind you waiting to get out of all this crap and then say, all right, now it's clear and it's working, and then respecting the PSAR, so that we're giving back a lot in this chop. PSAR flip, and he gets filled here. So here's another one. I just I'm not. I don't think you like this experiment. I think you got to have a command override that says when I'm that far in hand and I let that go negative, I just can't take that. Don't like it. So I'm talking out of both sides of my mouth here. Love the PSAR, trust the PSAR, but also respect the money. Yeah, you're a big kid. You can have two thoughts in your head at once. Woj on Devon gets a quick scratch. Then there wasn't much happening, so he just stops trading. Respectable. Tesla was working. Got paid here. I'm going to say, where's our reentry? But we'll keep one. And then, let's see, this is the Aussie. Quick -1 and a -1, scratch, +2 and +1 for a net 1. 2.1 for the day. My spider sense is that you're starting to turn your histogram in a really positive direction. So it's about time with that many trades in hand to do a large scale histogram review. So let's make an effort on that one. All right, that's everything we got for today. We'll get this published and posted and be ready for these guys tomorrow.